Welcome back to the Florida Retirement Podcast. I'm Kacey, and as always, I am joined by our resident financial expert, Murrell Winter, founder of SWAN Retirement Strategies in Sarasota. Murrell, great to have you.
Yep, great to be here.
I always love to sit down with you and pick your brain and, of course, help people solve this mystery that is retirement. Connect with us anytime. SwanStrategies.com is where you can do that, or all the info you need. It's always posted in our show notes for you. So, Merle, I thought today we could dive into what I know is one of your favorite topics, investing, and how different assets play a role in a well-balanced retirement portfolio. Of course, you know there are several different ways to invest, and it can feel very overwhelming for people just starting out who are trying to build that retirement nest egg. So, to start us off, how do you think new investors should approach investing, just in general?
So I'm very excited about this topic because it is foundational for people to understand. So the financial industry nowadays, they want to overcomplicate everything so you do not feel confident about your investments. In this podcast, we're going to be talking about stocks, bonds, real estate, and guaranteed contracts. Because if you boil down all of the investments that are out there to the four general topics, it really is going to boil down to stocks, bonds, real estate, and guaranteed contracts. Again, my job is to simplify this for my clients because again, not only can retirement be daunting, but when it comes to picking actual investments, it can be very overwhelming. So that's what I'm here to do, is help my clients do that.
Absolutely. All right. Well, let's dive in a little deeper into those four areas of investment that you mentioned. Let's start with stocks. How should people view investing in stocks these days?
So when it comes to the stock market or any type of investing in stocks, you have to understand, even though there's a lot of hype out there about like get rich quick, all that kind of thing, you have to understand with stock investing or investing in the stock market that you need to have a long-term time horizon, right? It's not a great place for you to invest a lump sum of money and decide, hey, I'm going to take this money out in a month from now because I would have made all this money. Well, in reality, the stock market doesn't work like that. It is, just like Jeff Bezos says, the stock market is a weighing machine. It is where people can go and cast their votes on who are the best companies out there. And that's what investing is weighing over a very long time period, what companies are performing the best over time, which ones are going to dominate the future. And so that's what you want to be invested in.
All right. Well, that's reassuring because the stock market can definitely seem like a roller coaster ride. But as we know, stocks are just one piece of the puzzle here. So let's talk about bonds. Where do bonds fit into a portfolio during periods of rising interest rates?
So bonds have been in the news a lot recently because, bonds used to only be at 1%, maybe 2% in the past, like the COVID time period right before COVID. But nowadays, where interest rates are now 4 to 5%, people think, hey, they're a little bit more attractive. But generally, 4 to 5% is not going to be a great rate of return if you still have a lot of downside risk. And what I mean by that is if you would have invested in U.S. Treasuries 5 years ago, meaning long-term bonds 5 years ago, if you would have started, today you would still be down about 41% on what you initially invested. Right? So that is scary. A lot of retirees, they come to me and they go, hey, my financial person told me that, hey, this is a safe investment, but then yet their account is down 20, 30, 40% because they chose long-term bonds and they have a lot of interest rate risk.
Okay.
Now, for a lot of our listeners and viewers, they might understand that back in the 70s and 80s when interest rates were 10, 15, 20%, those were attractive, right? That's really where you could build a 60-40 portfolio, 60% stocks, 40% bonds. But in today's rates, where it's anywhere from 0% to 4 to 5%, maybe a little bit more for riskier bonds, it might not be the best alternative for you.
Okay, that makes sense. Now, moving to another big asset class, real estate. A lot of people consider real estate as an investment, especially here in Florida. So how should individual investors evaluate real estate as part of their overall portfolio?
So, Kacey, if one more person calls me and says, hey, I'm going to cash in all of my retirement money and invest in rental properties, I'm going to be very upset because I think, it's not a good idea for someone to cash in all their retirement, all their nest egg that they need to rely on for the rest of their life and try to put it into an investment that, there is downside risk to real estate. You have what are called the 4 T's. So termites, tenants, toilets, and taxes, right? So those four, people think of this idea of, hey, I'm going to invest in real estate and it's going to be great. I'm going to earn 10% every single year. But really with those 4 T's, it could really diminish your actual rate of return. When many clients have come to me and they said, hey, this is my real estate portfolio, and it's great for people that are young that want to build up a real estate portfolio, but it could be very risky for retirees. They do the numbers and they decide, oh my gosh, after all the expenses, after all the time and headache and dealing with tenants, really really we only earn 2 to 5% per year, right? And so that can be very daunting once you look at those numbers and you say, hey, oh my gosh, there is not a whole lot of money in this. Maybe whenever we were younger, doing that was a great idea, but now in retirement, it might not be a great solution. And so I'd like to add to that real estate, when people think of real estate nowadays, they're thinking about short-term rentals, long-term rentals. But when I talk about real estate, I'm also talking about real estate companies, right? So you can invest in companies that deal with real estate on the stock market, like American Tower, Crown Castle, Simon Group, Realty Income. Those are very big companies that they invest in real estate. So then you don't have to deal with the tenants. So something to consider for some people.
All right. Well, those are all great points. Now let's talk about that fourth investment category you mentioned, guaranteed contracts. What are they? How do they work?
So guaranteed contracts, it is for those that are specifically low risk. So if you are low risk or no risk at all, meaning that the stock market scares you, you don't want any part of it where your money is going to go down, then guaranteed contracts might be something to consider. Just like with many people that are very risk or very fee sensitive, meaning, hey, I don't want to pay any fees. I want to reduce my fees as much as possible. A lot of these guaranteed contracts might have little or no fees at all. And again, they protect from the downside. So in the worst case scenario, if you pick the right accounts with me and my team, you might be paying 0 fees for these type of contracts. Plus, if the market goes down like 18, 20, 25, 30, 40%, you don't go down 1 penny. So it can be very attractive for some people. And that's what I like to go over with my clients is those 4 options. Again, stocks, bonds, real estate, and guaranteed contracts.
All right. Now that we've hit the 4 big ones, that brings me to a big question. How do you determine, Merle, the right asset allocation for a client?
Yep. So what I want everyone to do that's watching this or listening to this is very important to understand yourself and your psychology about money. So when it comes to your risk tolerance being, hey, how willing am I to see my account value go from $1 million down to 800,000 or up to 1.2 million and then down to 700,000, right? So in a extreme situation, what I'm talking about is that the more risk you take, the more volatility you're going to see in your account balance, right? So the question I like to ask is, on a scale from 0 to 10, 10 being the most aggressive, meaning that you're just going to go for all the home runs, right? Versus being a 0 where there's no risk at all, where would you rank yourself? And on that scale from 0 to 10, that's going to give you a better idea of how you want your money to work for you. And it's also going to give us a better idea as well. And so that's the first concept to understand is risk tolerance. Number 2 is time horizon. So if you want long-term investments, because the time horizon for a 30-year-old is going to be different for someone that's 70-year-old. You know what I mean? So understanding your time horizon, and what we love to do here at SWAN Retirement Strategies is create a bucket system to where you have short-term money, middle-term money, and long-term money. And so then you know that you have money coming available whenever you need it. You have enough liquidity at any given time. And that's what we love for all of our clients, and they really appreciate that.
All right. I love that, Merle. That's great advice. Now, before we wrap up, let's look ahead. What emerging trends in investing are you most excited about right now?
So this is something that has been around for a long time, but I'm just seeing better and better deals out there. When it comes to the financial industry, we are now seeing better and better opportunities in what are called alternative investments. So if you are somebody that is a high net worth individual or ultra high net worth individual, we're talking about people with $1 million or $5 million of investments or more, you can then qualify for these alternative investments that can be very beneficial for you. Again, alternative investments are going to be diversification, right? They're not going to be the normal stock, bond, real estate, and guaranteed contract. Is going to be a little bit different, but again, can provide great potential and benefits for you and your family in the future.
All right. Well, thank you so much, Merle. There's so much to consider when building a strong investment portfolio, and you have given us a great foundation today. I think a main takeaway is that incorporating the help of a financial professional like yourself is so beneficial. You do not have to navigate this world of investing alone because, as we have heard today, it can get complicated. So, Merle, if someone's tuned in who may be ready to enlist the help of someone like yourself, what do they need to do? How can they get in touch with SWAN Strategies?
Here at SWAN, we want to help as many households as possible. Unfortunately, we can only work with those families that have $500,000 or more of investable assets because of our investment strategies, because of the tax strategies that we like to work with our clients on. The minimum is typically $500,000 or more. And so if you do qualify for that threshold, you could definitely give us a call, 941-271-9005, or you can email us, merle@swanstrategies.com, or you could connect with us on the link below. So there's going to be a description below. You can find the link to our calendar to where you can schedule a meeting with us, and we can look forward to meeting you either in person, a phone call, or a Zoom call.
And if all else fails, swanstrategies.com is where you can head to get started with Merle and his incredible team that he's got over there at SWAN Strategies. Thank you so much for joining us today on the Florida Retirement Podcast. If you found this info helpful, be sure to subscribe. Share this with anyone planning for their retirement. For SWAN Retirement Strategies, I'm Kacey. We'll see you next time. Thanks, Merle.
Thanks.
We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Investment advisory services offered through Second Half Partners, LLC, and SEC registered investment advisor number 163454. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Second Half Partners, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and/or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Murrell Winter, FL NPN 19081242.